There's always been an innovation economy, and JP Morgan has an entire business dedicated to helping it thrive. By bringing together founders, startups, investors, and ideas, JP Morgan's commercial bank helps empower thousands of high-growth companies. Companies that are shaping the present and the future with tailored banking solutions and a global business network, JP Morgan helps innovators scale for today and tomorrow. Visit jpmorgan.com/startups to find out how they can help build your future. Hi, and welcome to today's episode of TechCrunch Live. My name is Misha Thambe, and I will be your host today. TechCrunch Live is all about helping founders build better venture-backed businesses. We do this by, you guessed it, talking to founders and the investors who finance them about how they met, why they chose each other, and how they work together. We'll chat with our amazing guests today, Josh Stein from Threshold Ventures and co-founder and CEO of Databook, Anand Shah. And we'll be looking at the startup's early pitch deck to hear what worked, what didn't, and everything in between. About halfway through the episode, we're going to switch over to the TC Live Pitchoff, where you, the folks in the audience, can raise your hand to be selected to pitch your startup to our guests. If you are watching through Twitter Spaces, you need to jump into Hopin to actually be able to pitch, so you can go ahead and do that now. Anand, I would love to start off with you. Tell us a little bit about Databooks, and then we'll dive into why did you decide to bootstrap a little bit at first?
Sure. So Databook is an enterprise customer intelligence platform. We've been running the business now for about 5 years. This is an area that I've been spending more than a decade in, looking at how you can get much better C-suite engagement to go and bring more pipeline and then increase deal sizes. And so started the company having lived and breathed this in a very analog way, and the idea was Databook would digitize it and be the Bloomberg for sales.
So it took you a little bit of time to raise. What was behind the decision to kind of bootstrap at first?
Well, I mean, I think it's probably a little bit unusual here in the Valley to go and make some money before you go and raise some money. But I think just back in the day when we were starting the business, it just felt like the right thing to do. I'd come from a background of selling and services, and we felt like that would be the best way. Actually, some of the early advisors that we had recommended that we try and bootstrap the business all the way through forever. And so it was a bit of a personal challenge. How far can we get? And I often think about that film with Tom Hanks, Castaway, and we tried and we tried and we tried to get over that crest of a wave. Bootstrapping, it's pretty impossible, especially in the enterprise SaaS space. So hence all roads kind of led me to Josh.
And with that, Josh, what was the meet moment? What was your meet cute as investor and founder?
Yeah, so we were originally introduced by Ellen Levy, who's a good friend of mine for, gosh, about 20 years now, and worked with us as a venture partner. Threshold is a spin out from DFJ. I lead it with my partner, Emily Melton. And back in the DFJ times, Ellen had introduced us to Tesla originally, so she has a lot of credibility when she makes an intro. Ellen knew that I had led a field sales team myself prior to being a VC. And so when I heard the idea, I immediately got it, because I'd actually lived that pain as a customer, trying to sell to, I was managing a team with about a $10 million quota. And so I had absolutely kind of experienced firsthand the need to be able to talk to customers in their own language, to frame a discussion of value in language that they would resonate with. So the idea made immediate sense to me, and I think we were introduced in October.
Yep.
And then basically shook hands in November.
Yep.
So why don't we go ahead? We have your early pitch deck. So why don't we go ahead and pull that up and take a look at some of those slides that kind of help seal the deal. I mean, having an investor who is actually experienced and has really felt that pain point definitely makes a difference. But let's go ahead and take a look at that pitch deck. So we'll go ahead and start off with the first slide, actually, if we can flip back. Talk to me about this framework. Why break it down in this way? And not just with Josh, but with other investors that you were speaking to. What was salient about this particular slide?
Yeah, actually, I wonder, Nisha, if we go back a slide, right to the cover slide, I'll say one thing which I felt was important at the time when I met with Josh, and I did this with, I was meeting with a bunch of investors at the time. I always stayed on the cover slide, and I always stayed on the cover slide to tell my story and who I am and what we do, and I spent as much time on that before the investor was actually interested to then actually know more about the business. I think if you turn in and you're just trying to go through the slides and you're trying to pitch, then that probably doesn't work so well. So I was very fortunate. I had 5 minutes prior to the meeting getting set up, and that was actually really important for me. So when actually I met Josh and we started getting to know each other a little bit, we had a personal story and a background that we could share before drilling into the slides. So that was kind of, I'm sort of giving you a bit of background to how this pitch meeting went down. And it kind of started here for about the first 20, 30 minutes. And then if you go to the next slide, I think this was more about a storyboard. So the slides that you'll see is more about a story of how we came to this conclusion that insights, it was really deep customer insights, were changing the way in which sales and marketing, anyone in the go-to-market teams were going to market. Now, I look back at this slide and I fear that this is a slide that I've never used since this deck. I realized there were certain things of it kind of that came out of some kind of a PowerPoint template, but it was meant to just sort of spark the emotion of these are questions, and can you actually solve these questions? We can solve all of these questions. So if these questions resonate to you and you know how long or how hard they are to go and answer, we have the answer for those.
Well, I'm going to pause for just a second. Josh, I'm curious we had talked about that first slide briefly of, setting that stage, creating that connection. How important is it to you as an investor to have that conversation in the beginning rather than through the presentation?
I think it's critical, and I think it's actually kind of goes to the core value proposition and mission of Databook, which is when you're selling a 7 or 8 figure deal as a salesperson, or frankly, if you think about it as an entrepreneur raising millions of dollars, there's a tendency to want to jump right into kind of the slides and the details and or if it's a product, the features and the functionality, and that's not really how enterprise sales gets done. It's much more about building a connection, building a rapport, establishing trust, credibility. You have to be armed with all of the data and the knowledge so that you can do that. But I think the best salespeople, whether it's founders or people selling an enterprise product, know how to come in and establish that connection right off the bat. So I think it's both something that Anand did very well, but also it's what the product of Databook allows our customers to do.
When I was so excited, I just jumped into that first slide and second slide, and we're ready to go on the first.
Yeah, I mean, I think the slide deck is somewhat a little bit of a misnomer because, for example, I went out and I picked up the Sequoia pitch deck template, and I used that for some meetings in prior years when I met with investors. And some folks might want to go and use a deck template that they read somewhere, but it's really got to be specific to your business, to what you're doing and who you are. And I think in particular with this opening cover slide, all I was really trying to relate to the fact was I've been doing this for a really long time, and this is my passion, and this is what I really want to go do. And my expectation would be hopefully the investor can see I am the right person for this business now and for a long period of time. Can you also see that? And do you also understand what I'm talking about? And that was my sense of, if having done a few of those meetings at the same time, if there's not that connection point and you can't see why somebody's starting this business, it's probably not the right business. Like, for example, I always say if I started DoorDash, I would have failed many times over by now. I don't know that industry, but this industry, I know really, really well.
And that's really, I think, the thing that grabbed me in our first meeting was that you had lived this pain and also created the solutions, and now you were effectively productizing it. So you would run this practice at Accenture, effectively helping really large organizations do exactly this for years. And then the idea that, okay, I'm going to now use the latest in technology and AI to be able to turn this into something that can be made into a software product, that I found very compelling. So in the same way that I think I was ready to hear the pitch, having been in the shoes of the customer, the fact that you had so much experience with it, that was the thing that really stood out to me.
And maybe actually, sorry, I know that you probably want to go through the pitch deck, but actually, how did we even get to the meeting? Well, Josh was one of a small handful of partners at VCs who we had targeted to try and get meetings with. And one thing I learned through the process was it's less about the brand name, it's more about the partner. And actually, if I was going to go, and as I've been doing that throughout, it's much more about the human connection with an individual and their background and their experience and how they're going to be a partner over the long run. And I knew going into this, it was going to be a long run, like a marriage. You're not kind of jumping in for a one-night date here. You're going for a long term. So you want to find the person who resonates with you, who you can then spend a lot of time with going forward.
I think that we hear that from a lot of founders, that it is a marriage. But I think that many founders are nervous when they're doing their raise. What is your recommendation to founders when they're just, hey, I need money now? How do they balance that I need money now versus making sure they really find that right investor fit?
I would always say go make some money first. If you can, try and figure out how to go make some money before you try and go raise some money, because you'll have more optionality going forward. If you're entirely reliant on external funding, it makes it harder for you. So then you're going to be desperate about who you're going to be raising some money from.
I'd completely agree with that. I think it is a very long-term relationship. When we built Threshold, we really spent a lot of time thinking about how do we align the incentives for that long-term relationship. So we keep it really small. We only do about 8 to 10 new investments a year. We deploy about $150 million. So by Valley standards, that's pretty small these days. And we often will get involved, like with Databook. I think we've now quadrupled our initial check into the company. So we've also set it up so that we can, in the same way that you very successfully upsell your customers over time and have grown some of your accounts very meaningfully. You've grown our account quite substantially.
Yeah.
But I would tell founders, don't be in a rush. I mean, I don't think it's a good idea to get into a relationship that could very well last for a decade without taking your time and getting to know the person.
Excellent. Why don't we go ahead and move forward to the next slide? I know you, whenever a company says, we've spent 3 years in stealth and using phrases like scientific approach, talk to me a little bit about why this slide and why structure it this way.
Well, I mean, for us at least, I mean, I was writing some of these slide decks before to try and speak with investors, and I actually got some advice from a family member who was a VC in his past life, and he just helped me to tune up the storyline and the storyboard. And one of the things he was saying, well, this is pretty unique what you're doing here, so make it seem a little bit stealthy and a bit exciting, and sort of fade away what you're doing and don't give away all the trade secrets. And I was like, okay, well, try it out. And I'm not 100% sure if it necessarily worked, but this is how we put this slide together, just to sort of say that this is something we've got some core IP on, and we've been working on this for a period of time, and it's not just the greatest, latest thing we threw into a Chrome extension. We're hoping that you like it.
The thing that really grabbed me on this slide was the C for C, the case for change.
Okay.
So one of the things I learned doing sales myself is when you're selling something, you're fundamentally making the case for change. You're telling the customer that you should think about changing your business practices in this new way, and then what you're trying to do is to weave your product as the solution for that.
Yeah.
And when I saw that, and that really said to me, okay, this is a guy that understands how enterprise sales is actually done. So I remember feeling like,
I never actually asked you about that, so that's kind of interesting that caught your eye. I'm glad that you noticed that. Well,
it's amazing how many people get that wrong, by the way, where people who come from a product background, they want to jump right into the specs and the features, and customers' eyes just glaze over. What they want to hear about is, do you understand my problems, and can you help me solve them?
I guess it solved actually a twin problem, right? I was trying to get this slide to mean something to the right investor, and it obviously clearly meant the right thing to the right person.
Targeting the slide decks is very important. Whenever companies showcase their product in some way, how important is that? So this slide, for example, we're getting screenshots. Josh, as an investor, how much do you really look at that versus focus on the rest of the specs that might be in a deck?
So I think we're looking for founders that we find compelling, that can articulate a vision, and they're going to sell customers. We want them to be able to get us excited about the idea as well. And then it's validating that with proof points. One of the things that made Databook really stand out was even at the relatively early scale where we invested, they had some incredible customers. I mean, just massive Fortune 500 customers. Today we have customers like Salesforce, Microsoft, Databricks, and not small deals. I mean, very, very large contracts. So for me, what that says is this is an idea that makes sense, a person who I find very compelling, and it's also validated by the fact that there are customers paying very substantial dollars to use the product already.
Yeah, I mean, I can't remember if it was on this slide or if it was later on, but I kind of then went into the actual product demo. I feel like that's a pretty important step that you've got to get into. So it's not vaporware. People understand what it is and how it works. And from there, then there's usually some kind of a summary slide. Okay, well, I've just shown you what it is. This is why it's most relevant. Now, for us, these were 3 of the reasons that we described that they were relevant back on slide 8, actually. The one before, those was kind of the, also maybe it was 7, the one before, the 3 reasons. So however you put it together, I think you just got to make sure that you know, the slides tell the story in the way in which you're describing your business works and operates.
You know, the funny thing about the product demos, I think I always want to see them and make sure I understand the product. But if, you know, I've been doing this 18 years now, one thing I've learned is I tend to focus more on the idea and then also the validation from the customers. Because, you know, what I think of the product is less important than what Microsoft or Salesforce thinks of the product. And so it's something that you have to have in there. But for me, it's actually, I put it relatively lower down priority list.
Yeah, good to know.
When you're talking to, when you're speaking about the customer experience, in your mind, what is the best way that a founder can communicate the customer feedback? Is it through quotes? Is it just through deal size with those companies? What do you look at?
Well, you know, part of what we do is actually talk to the customers. So we talk to, you know, existing customers, potential customers as part of the due diligence process, where you sort of say, okay, this idea makes sense. Now let's validate that we, you know, think our thesis is correct. And then also the data. So, you know, with companies like Databook, you're looking for customers who are using the product frequently, who are, you know, sticking around, renewing their contracts, expanding their contracts with upsells. And so one of the great things as a SaaS investor is that there's usually a lot of data that we can look at. And so, you know, in the case of Databook, that all kind of penciled out. It was like, you know, people buying the product, you know, adding more usage, et cetera.
So actually in the pitch deck, I think there's a couple of slides later which show some quotes which were redacted, I think on page maybe slide 7 or maybe slide 8. There were a couple of those quotes, and then there were also some other bubbles.
That last slide was kind of a mic drop sort of slide. It was like, we're actually best in class in every metric.
Go ahead and, let's go ahead and pause here for a second. Let's talk about this best in class. As you know, I review thousands of startups a year myself, and it's very interesting when a company says best in class. So I want to talk about how you use those proof points and what you use to actually determine that, so that other founders, when they're saying that, know how to actually mean it. Let's talk through that a little bit.
I can kick it off. I mean, I think this is a source from Bessemer Venture Partners. They led our Series B, and you can go to their website. They've got a whole set of benchmark metrics that you can download, and they've got a series of benchmarks for the stage of where you're at as a company. So we just took that, and then we sort of said, well, where are we in terms of on each one of these 5 factors? So the first one's the annual recurring revenue growth. Sort of good is 100%, better is 100 to 200%. We were over 200% year over year. We've now done 4 years of 3x growth year over year. The second one was the CAC, the cost of acquisition, customer acquisition payback. And actually, how many months does it take for you to then get the payback? Again, you can sort of read the charts here from 24 months to 12 to 24 months, and we were less than a year. The third one was around the customer lifetime value over the cost of customer acquisition. We were at 5x. Then there's the net retention, which kind of goes back to Josh's point. The net retention or net dollar retention rate is a really useful metric to take a look at. How many customers are you sticking with who are renewing and then expanding with you, net of any ones which are churning or leaving? And our numbers have been well over 200%. So, and then the last one is just really around free cash flow. And I think that goes back to the point around when to raise. And we've had a bit of a unique business from that bootstrapping days, which have allowed us to run a business which we feel like we can continue to run with good cash flow in the business, rather than sort of burning all the money looking for the next round or hoping for the next round. And so I would encourage any entrepreneurs to think carefully about the cash in their business and how they can maximize that for maximum optionality going forward. So that was where we were in 2019.
I mean, software business.
Oh, let's pause on this. Let's pause with this slide. Let's go back a little bit. I think we skipped a couple slides, and I want to make sure that we get to them too. If we can go back like 2 more. There we go. Go ahead.
I was going to say, I mean, software businesses, I think we all get into this to, solve problems in the world and make things run more efficiently. And that's kind of where you get the satisfaction. But at the end of the day, software businesses are pretty straightforward. You have a product that you make, and if you can sell it to a customer, build the product and operate it and sell it at a cost that compares favorably to what they're willing to pay you, you will have a successful business. And if you can't, you won't. And what those metrics were really showing was that Databook could do exactly that. They could acquire customers that would stay around for years and years, where the margin dollars that the customers were paying were significantly in excess of what it costs to build and sell the product. And that's how you have a great company.
So I want to talk about this slide right here. When you're talking about this breakdown, big numbers, as an investor and you see this on the screen, I know that Databook had a lot of really strong customers at the beginning. What is your initial reaction, or what was your initial reaction at the time of seeing this?
So this slide, I think, was actually the one that would be the head fake for a lot of people, because these would actually not be considered very big numbers in venture world. I thought that Anand was getting these actually very, very low, and so it didn't bother me. But when you say you have 5,000-ish customers and $1 billion of potential revenue, that's actually kind of a small addressable market. My belief is it's actually much, much larger than that. I think we would probably have different numbers today, but I remember thinking like, yeah, no, he's getting that way low.
Well, it's interesting, as a founder, you put this slide together and you're thinking, I want to be realistic about what's the market. And so we did a bottom-up assessment of what we thought it could be. Maybe with some of the adjustments in some of the numbers, we would have flipped and inverted this. At the top of the pyramid would have been 3 billion, then maybe 2, and then 1, because we're not really focused on the SMB market. But as we found in subsequent investor decks and when we did more studies, actually our TAM is actually much greater than that. So it was interesting. From my perspective, I was trying to be realistic, but I think from an investor perspective, you probably want to be showing that you are playing in a big market that potentially is growing much, much bigger.
I like that. I think a lot of people estimate high, so it was kind of refreshing to have someone that was being conservative. But I would say these are off by an order of magnitude.
That's it's rare to see that in a pitch deck where it's optimized for less than more. Go ahead and go to the next slide if we can hit slide 11. There we go. One thing that is interesting, just more broadly, is the timing of the raise. So, COVID, it was its own roller coaster of an adventure. And I'm curious, what was the relationship and the dynamic like from when you raised through those couple of years?
Yeah, so I think, it's interesting because this slide is potentially a bit of a snapshot of the market itself for enterprise sales and marketing. Is actually, there's a lot of companies out there who have got solutions, and most of them are point solutions. What we were trying to make the point here was we're a full stack solution, end to end across the full sales cycle. So we made the point there. We then started working with customers. I remember our first board meeting after we raised, it was a disaster because we hadn't onboarded any new customers. It was COVID, and none of our customers wanted to expand, or new customers didn't want to start immediately, and so we kind of just couldn't read the signals at all. It was terrible. However, later that year, towards the back half of 2020, what we realized was a lot of the customers who we were talking to, or prospective customers, they were feeling a lot of pain because their sales executives, who typically were going out to meet with their customers, asking them about their business, and that's how they were getting their intelligence and their insights, were unable to do that. They had a 30-minute window, they had a 60-minute window on a Zoom meeting or a Teams meeting, and so this was really a big area where they were losing a lot of customers. So they ended up turning to Databook to answer some of those questions on that second slide, because we were helping them to understand the customers in a way outside in that they couldn't ever do before. So now we're sort of coming towards the end of COVID here. I'd say we were probably a net beneficiary from moving towards a more digital enterprise sales motion.
It's funny you mentioned there was sort of that choppy start, a lot of which was macro with COVID. But I think experienced investors, we don't expect perfect smoothness, right? It's early stage companies have a lot of variability. Stuff happens. I think, one of the things we try to be as a kind of steady, steadfast partner. I think entrepreneurs often think we're going to freak out more when there's bad news than not. We kind of expect the bad news. And I think relevantly with Databook, when we first met, Anand was thinking about raising a larger round. And one of the pieces of feedback we gave him at the time was, actually, we think that rather than raise a larger Series A right now, raise a smaller seed, then relatively quickly go out for a Series A. We think that that would actually be more appropriate given the stage. The expectations go up as you raise more money and later series rounds at higher prices. People expect more perfection. If you're a public company and you miss your revenue target by 2%, your stock might drop by 20 or 30% in a day. So that's sort of the extreme end of the spectrum. And so, one of the things that we kind of knew that there would be variability. Now, we didn't expect COVID, and I think you managed through it very, very admirably. But one of the pieces of advice I'd give founders is, find investors who have done this many times before and understand that it's not going to be a perfect, smooth up into the right curve.
Mm-hmm.
Excellent. Well, we have a couple minutes left. I want to make sure we get to the last slide, and I have some final questions for y'all. Why don't we go to that slide 13, I think? So where are you guys now? We were just talking about, the impact of COVID, and I kind of want to understand where we are now. Still best in class.
Yeah, I mean, it's very similar kind of metrics, slightly more mature metrics here for things like efficiency scores and whatnot. But yeah, we've been able to continue strongly performing. We've got a very high focus on very few customers, more personal touch. We call it the Jerry Maguire approach. So we want to make sure that we can then go and spend more time with them, and we can continue to grow the business. And so far, so good. So yeah, we just raised a Series B in February, as I mentioned, led by Bessemer, and with
quite
DFJ
a large
growth.
round too.
It was a large round, $50 million, and got over $500 million in valuation. And to be honest, the timing with the tech markets and the war in Ukraine and other things going on with the macro environment, we were fortunate to sort of get that one finalized at the right time. But it's kind of done what we were hoping for it to do, which was to shine a light on our company and the market we're playing in, to get an increase in the applicants to join Databook. We're hiring like crazy right now. So that's been very, very helpful for us over the last just 2 months now.
So I have a really quick, that's fantastic. I think seeing that growth, and I know that it's been a challenging couple of years, but to know that this is really providing a service is great for your customers. Josh, I have a question for you. As Databooks was raising their next series of rounds, what were pieces of advice that you gave, or Anand, what was something that was particularly helpful from an earlier investor as you're going through this process, because it does change over time?
Gosh, I think it's funny. I remember about 6 months before you went out to raise the Series B, you were running very efficiently, and you actually were at one point considering, do I raise any more capital at all? And I think efficiency is a great goal, but as you said earlier on, relative to bootstrapping, with enterprise software, because the payments come over time, but you have to front load the costs, you do tend to optimize growth if you don't have outside capital. I think the second metric, the CAC payback, is the one that I would probably hang my hat on. It's basically how quickly do you recover the cost, that acquisition cost. And even with our extremely best in class, kind of very efficient acquisition, you still need that outside capital to go after it. In terms of the specific advice in the round, my advice was to go with investors who really understand the space and are appropriate for that stage. Both Bessemer and DFJ Growth, terrific firms, ones that we've worked with many, many times over a decade plus. And so also kind of maintaining that alignment of all the people around the table. So when we're in the boardroom, it's everybody's pulling on the same oars. We win, we lose together. That can be really critical. One thing you've seen in the last 4 or 5 years is a lot of new entrants coming into growth stage financing, and if you don't have that kind of trust level and alignment, and things go a little wonky, I've seen it cause problems for companies.
And Anand, as you've gone through the process, how have you balanced that relationship between investors as well at the different stages?
Yeah, I mean, I think one of the things that Josh mentioned to me up front, which has been very helpful, is just get more hands around the table. And I think that's been super helpful. At the time when Josh was leading the round, he introduced me to Semil Shah, who leads Haystack, and introduced me to a handful of other angel investors. And that was really very, very crucial, so that we had multiple stakeholders who've been there, done that, who could help us along our journey in whatever way that they could. So, beyond seed, then we did a Series A last April, and now with the Series B, I think it really does help to have more folks who understand the space and who want to join the journey. And then you've got more ways to grow the business and drive innovation for customers. At the end of the day, this is all about the customers and how do we drive that innovation. We're pouring millions and millions of dollars into a very unique platform that's never been built before. And so you can only do that through getting sort of outside capital to help you on that journey quickly.
Well, thank you so much. Speaking of, founders going through their journey, we are actually going to switch over to the pitch-off portion of our chat today. And we have 3 companies who we have lined up. They will have exactly 2 minutes to pitch their products to the both of you. We'll be giving them our feedback and do a little bit of Q&A for about 4 minutes after that. So with that, we will jump into the pitch off section. Our first founder, who is the CEO and co-founder of Keyphone, Lauren Hendricks. Keyphone, why don't you go ahead and come on up? And while she is joining, we will also have we've also dropped a link in the chat with some background information on Databook, so you can take a look at them and their previous raises. And we also are having an event come up next week in Austin. And if you are a founder in Austin, there is a link for you to join that pitch off as well, so you can apply there. Excellent. Looks like we have Lauren online. Lauren, why don't you go ahead and start? You got 2 minutes.
Hey, Lauren.
Great, thanks so much. And I'm having camera problems, but I'm going to leave it. Nice to meet everyone. Hi, I'm Lauren Hendricks, and I'm the CEO and co-founder of Keyphone. I've spent the last 20 years of my life living and working in sub-Saharan Africa, working in the financial inclusion and fintech space. And I've been frustrated by the fact that the people I most want to benefit from these innovations can't because they don't own a smartphone. This has led me to create Keyphone. Keyphone is building an audience for content across sub-Saharan Africa by providing free smartphones and data for the 70% of the population that is currently unconnected. Keyphone is the first company generating revenue in Africa through lock screen advertising and increasing access to devices. We are changing the way that Africa pays for devices and data, creating a value for a person's time and attention. Keyphone provides access to consumers at their moment of first digital engagement. Our content providers have first access to consumers, and our targeting capabilities deliver content at the right time and to the right person. In exchange for viewing relevant ads, content, and offers on their lock screens, users earn points that they can use to purchase data, airtime, and premium content like music and video entertainment. They can also complete other in-app tasks like taking surveys, downloading apps, viewing videos to generate even more rewards. Keyphone is particularly focused on increasing women's access, as they are the primary agents in selecting goods and services which enhance and enrich the lives of their families. Keyphone gives women the power and the resources to improve the quality of the life of not just their own families, but their entire communities. We hope you'll join us in making our vision for Africa a reality. The future is just a Keyphone away. That's it.
Very cool.
Well done. I don't think we've had a founder who has been able to get under that time mark. So congrats on that. All right, Josh, I'll have you start off.
So first of all, very compelling idea. We think kind of enabling the developing world and kind of is sort of a core thesis for the next 10 years for sure. One of our investments that we took public late last year is Remitly, which you might be familiar with in the remittances space. And Matt Oppenheimer, the CEO there, is definitely someone that you might want to connect with in terms of sort of how he's gone out building out that business. I'm curious, are you using, it sounds like you're focusing on the targeting platform for the lock screen kind of advertising, capturing attention. Are you going to be partnering with anyone for the hardware and the network? And how do you anticipate kind of covering those front-loaded costs?
Yeah, so we are working with Transsion, which produces itel phones, which are itel and Techno were two of the most common phones in the sub-Saharan Africa market. They're kind of priced at a price point that works for our target market. So we're working with them in terms of sourcing the phones. And right now we're financing the phones upfront ourselves. But long-term, as we increase in the volume of sales, we believe we'll be able to work out some trade financing terms with them.
From a business standpoint, that's probably one of the areas I'd want to drill into the most, and would encourage you to think about it is when you have a product where you have to, even an inexpensive phone, if you have to, purchase the phone and finance it and then, arrange for the network access, but the monetization of the user's attention happens over time. Particularly if you're growing very, very quickly, it can get expensive quickly, right? In terms of, it might be a profitable transaction, but you're gonna have to front load a lot of the cash. So really thinking through that financing early, I think would be critical.
And I will say we have kind of two paths, because we're working on financing data and as well as devices. And so we distribute phones to certain users, but people can also download the app because rewards are built into it. So we're actually seeing almost 20% daily increase in our users in just app downloads, because people like receiving the rewards that they get for watching the ads and watching the videos.
Oh, sure.
So that helps kind of offset our cost per client for the full phone users.
I didn't realize you were already live with the product. That's I would definitely drop those stats in the pitch. How many users do you have?
We have about 3,500 users right now.
And what kind of monetization are you seeing?
So we're still kind of, as we increase our users, we're working on increasing our ad revenue base. Right now, we're seeing about $1 per month ad revenue per user.
How did you fund the business until this point in time, and what are you looking to do next to get to that next milestone you're looking for?
So far we've raised $540,000 in pre-seed funding. We're actually in the middle of another small round, but I won't talk about that. And we're part of a Techstars portfolio. So they've helped us with some of the pre-financing. And so we actually have about 3,500 users. We've actually distributed 100 phones. The next 2,000 phones go out in the next kind of 2 weeks.
So how much money do you need now for that next part of your journey over the next year or two?
We have a runway now that will take us to early 2023, and then we'll need about another $2 million as we expand to other countries across the region.
Another company that might be a good one to look at is a company called D-Light. It was
yeah, I know D-Light well.
Yeah, just the charging electrical infrastructure in a lot of those regions was a challenge. So that, looking at their rollout might be instructive for you. That's a great idea.
Thanks you guys so much for the time. I really appreciate it.
Good luck.
Thank
Fantastic.
you.
Good job. Awesome. Next, we have the founder of Sukiru, Varun Damija. Let's see if we can pull him up. I always love a company that is doing good work in different markets. It's definitely a different frame shift from talking about, enterprise sales and then switching gears. All right, do we have
in the US? People who treat this.
I mean, that's pretty accurate as well. All right, Varun, we have you on. Can you hear us?
Yes, Nisha, I can hear you.
You have 2 minutes. The floor is yours.
Great. Thank you. Good afternoon. I'm Varun Damija. I'm the founder of Sukiru. We are the Google Maps of careers and help working professionals get from point A to point B. Any surfers in the audience? I hear surfing is like riding a bird, but I find it very dangerous. As we all know, jobs for life have been replaced by the 21st century career, and people need to constantly keep up and move from wave to wave. However, the lack of adequate tools has left workers unsupported as they chart their course through a fast-changing landscape. Now imagine standing on the beach with a surfboard. Many of us see the expert career surfers out there, but we can't get into the water except for when it's a sink or swim situation. So how do we solve this big problem? Sukiru is a data-driven career navigation platform and helps users with career growth, career transition, and job search. And we all know these are pretty frustrating. We have features like Resume Sensei, which uses AI to score a resume on 55 different parameters in just 6 seconds or under. Then we have Interview Boost, which lets users know they're fit to a job even before they apply. So we allow users to lift their game and get the power in their own hands. Why should you invest in Sukiru? It's a huge market, as the taxonomy of skills is the same around the world. And with 1 billion knowledge workers, the TAM estimate is $55 billion. We have the solution. I promise you that we will become the norm. I have personally scaled EdTech businesses globally, and I have a strong team joining us. Our platform's ready. We're raising a pre-seed round of $1 million, and we are definitely building a painkiller and not a vitamin. We are also selected to the USC EdTech Accelerator and are pitching at ESU GSV in April. Thank you.
Fantastic, great job, and right at time too. You guys are on it today. Anand, why don't I have you take it away?
Sure, I got just a couple of questions. I mean, as you talk about recruitment and sort of career transitions, everyone's very used to LinkedIn being a key facet for that. So maybe just explain how this is, in addition to LinkedIn, or how is it similar or different?
So great question, Anand. LinkedIn's very good at networking, but if you get some user feedback around it, people are not finding much value beyond that networking. Almost no one's been able to find a job. But more importantly, it's almost one way. And while LinkedIn's tried giving people some feedback with respect to fit to job and so on, it's not gone much beyond that.
Okay. And how many, do you have a live platform now? You said the platform's ready. Are folks using it, and how often are they using it? I know that one of the metrics we were often being measured on is the monthly active usage sort of stats. Do you have any data on progress so far?
We are pre-launch, but we have done a lot of user interviewing and private beta. One metric or one feature we need to build on is engagement in community, so that users keep coming back. And you're right, we have to track DAUs and MAUs, and that ratio, that's going to be a key metric for us.
Yeah, what about questions for you?
Yeah, it's interesting. I think when you mentioned it as a comparison to surfing and kind of the sink or swim, I found myself thinking, yeah, that makes a lot of sense. It's like you would ideally want to learn how to swim before you were put into that situation, but everyone's busy, you have best intentions, you forget to do it. It's kind of the old vitamin aspirin thing. I think career management and developing skills is like that. People all know that they need to do it. It's a dynamic world. That's a long-term good thing, but everyone also gets busy day to day. So I think there's an opportunity there for helping people develop those. I think the biggest challenge I think you might have to overcome is getting people to pay attention to it. One way I've seen it done, I led an investment in a company called Doximity, which is somewhat analogous to LinkedIn in the healthcare space, is how do you engage people on a weekly or monthly or essentially daily basis with things that are more quick hit. So with Doximity, one of the things was news, aggregating news. LinkedIn, I think, is very similar in terms of there's the kind of career management aspect, but then you add more immediate value with news. So I think that would really be the key thing, is showing, from an investor standpoint, showing that you can get people to allocate their time and their attention to this. I think I agree with the premise. I just would want to see that you can get people to actually come and do it on a regular basis.
Yeah, actually, just in terms of a founder story, I remember launching the product, and I was, in the bootstrap days prior to us even raising any money, and I have to say I was totally embarrassed by what we launched in the first round. But I think I remember sort of I think Paul Graham said it well, if you're not totally embarrassed by the first product you launched, you probably launched too late. So just get it out there, see what happens. If you can do that without raising any money or on very low amounts of money, I think you'll learn a lot about what's going on in the market, how people are responding to it, how you can make improvements, and then you'll get that early feedback from users that it's hard to see when you're in the development phases.
Sure.
Is there a specific industry or geography that you are looking to target or roll this out in?
The industry is EdTech, and I'm based in India, but plan to take it global. India first, US next. That's sort of the schedule.
Great. All right, with that, we will wrap up. Thank you so much, Barun, and excited to see your product live and the iterations of it. Next up, we have the co-founder of the Mango Jelly, quite the name, Divya Upadhyay. Why don't you come on up? And I really love the name Mango Jelly. I'm excited to see what the company is about. And while she's there, we go. We got her on. Can you hear us?
Yeah. Hi, Nisha.
Great. You have 2 minutes. The time is yours.
Good. Hi, everyone. I'm Divya, a co-founder at the Mango Jelly, a global financial freedom ecosystem for content creators. We all love browsing content on social media, but do you know that millions of creators on the long tail are unable to earn a sufficient and steady income? Only top 5% of creators make bank, and the rest have to hustle very, very hard to earn platform revenue share or convince either brands or fans to pay them. And look at the content which is served to you. Is it diverse and inclusive? No, it's not. And brands are realizing this. They are looking to work with creators who can represent their audience. At the Mango Jelly, we are empowering creators to build the future of work and financial freedom. We connect creators with fans and brands for economic opportunities. Our product is built with Web 2 and Web 3 to fundamentally enable content ownership and monetization. The creator economy is valued at over $100 billion. We intend to become the one-stop destination and the largest marketplace for creativity in the world. And doing so, fuel a movement for responsible, diverse, and inclusive content in marketing. We currently have more than 3,000 creators from 101 countries on the platform, all organically by word of mouth. Having bootstrapped so far, we are now raising our seed round for 500K. We believe that we are building a revolution in content and marketing and hope that you will join us on the journey to make history. Thank you.
Excellent, and also under time, very impressive. So I would like to start off, what is you say that you're connecting these creators to brands. Can you talk about some of the brands that you have on your platform right now or that you've developed relationships with?
Yeah, so the brands on the platform right now are usually startups, and these brands are also based globally. So for example, there is Peer Storage from the US. There are a couple of companies in EdTech in India. So we are trying to work with brands globally, and we are also currently in talks with a US-based cosmetics company, which wants to work with a wide pool of creators on the platform.
Great. Josh, I'll throw it to you.
Yeah, first of all, congratulations on bootstrapping. That's following a lot of the advice in terms of getting this out. Like, what kind of scale are you at in terms of revenue today?
Yeah, so currently we have tested the product as paid trials with brands. So we have currently tested with 3 brands. Before that, we were doing free trials for brands, but we have tested it with 3 brands. And currently, what we are seeing is that it can go like an average of $200 to $500 for one activity which a brand would do with us. And then for the higher ticket revenue from brands, we have usually a $10,000 kind of a campaign which a brand wants to do with us, which is like one of the campaigns which we are currently in talks with and trying to close.
Well, marketplaces, I think, always get VCs and investors' attention because they have very powerful kind of network effects that create competitive challenge can be getting them started. You need to get both sides of the marketplace to show up. What's been have you been leading with kind of attracting the creators more or attracting the brands and the dollars more? Like what tactics are you using to bring those points down?
Yeah, that is a very good question. And of course, we tried to understand what should we do in the beginning for the creator and brand side. And we decided on doing the creators first. Because we want to focus on the problems that creators are facing, and that helps us to connect with a wide variety of creators and also understand the problems which different kinds of creators are facing in different stages of their career. And when we have a wide pool of creators, we'll be able to attract more brands who can work with multiple creators at a time, and it also creates a lot of opportunity for the creators on the platform. So we are trying to focus firstly on building a wider creator pool and attracting brands based on the creator pool. And to talk about how we are attracting creators, so currently we just posted in a few communities, and from there it got picked by some major publications in creator economy, and people started discovering us. So it is mostly by word of mouth. We have not done any paid advertising yet.
Cool. And do you take like a percentage of the transaction as the marketplace?
Yeah, so we are focusing on two models. One is the marketplace, where on every financial transaction we will earn a percentage fee, and then there's a SaaS model. So we'll be offering some premium features to both creators and brands, which they'll be able to access with a monthly subscription fee. So these are the two revenue models which we are focusing on. Also, to add about the marketplace, creators can connect with brands as well as with fellow creators. So for example, if I'm a creator and I've got very good video editing skills or voiceover skills, or I write very good scripts, I can offer that as a service to fellow creators as well. So it becomes an n-sided marketplace where creators are able to offer services to each other, and that also becomes financial transactions over which we earn a percentage fee.
Just go back to the, I don't know, last comment maybe. I was just going to say that I just go back to the case study of Airbnb and how they started in the late 2000s. And it sounds like when you're going with the content creators on the content side, one side of the platform clearly will drive the other. I remember when they started taking professional photo shoots of people's living, apartments and homes, that was then attractive to folks who wanted to go rent them. So good luck on the journey.
Great. Thank you so much. Thanks for the opportunity.
Thanks, Divya. And for folks who are listening, that was Mango Jelly. I have a couple more questions, Josh and Anand, for you before we head out today. And the first is to you, Anand. If you could talk to your founder self when you first started the company, what are a couple pieces of advice that you would give to yourself?
It's a good question. I think we're here now. I started the company in 2016 with my co-founder Alex, who's based in London, and we kind of went through a long period from that bootstrapping phase before we raised money. I'm not sure I would have done anything differently from that perspective. It definitely taught us a lot of lessons around how to go build a business, how to get product market fit, helped us to understand efficiency, what the market was really looking for. It would have probably been helpful with some of the early angel funding that we got, maybe to do a little bit more cash flow analysis so we had a little bit more in the bank. There were definitely some missed payrolls early on and some tough moments. And so maybe reducing those tough moments would have helped us, I'm sure. But there are lessons to be learned. Only through those tough moments do you then sort of rise up from that. And with the team, we were very, very fortunate that we had a group of people who joined us who stuck around for a very long period of time, and many of them still here. And we were very, very fortunate from that perspective. So some lessons learned: find good people with the right attitude, who are willing to collaborate, dig in, do multiple roles, multiple jobs, and don't hire too many senior, very experienced people too early on. You're looking for folks who can really just roll their sleeves up and get on with it in multiple roles. We're very, very fortunate.
Rolling your sleeves up is definitely critical when building a company, especially when you're bootstrapping. Josh, from your perspective as an investor, what are the key things that you look for and will continue to look for in other companies that might come across your table?
I think we're always looking for ideas, first of all, that are targeting large opportunities, but also have some, kind of inherent tailwind. So the name Threshold comes from threshold effect, which is a thing you see in biology. You see it in growth of networks. It's where you have some sort of kind of exponential change where, progress is slow, and then there's some catalyst that drives exponential change. And so we try to identify things. It could be an underlying technology. It could be a shift in a market that are going to sort of give a tailwind to the business. And then I think we're looking for founders that can also operate different levels. I mean, one of the things that's been really just awesome to watch Anand do is sort of shift gears from the bootstrap mode, where you're really like kind of hands-on doing everything yourself, to now operating at real scale, right? Where you're having to transition to becoming more of like a leader or a manager of managers, where you can't be interacting with every customer, with every employee directly. And as we think about continuing to triple the business year after year, it's kind of like upshifting into different gears. And the best founders are the ones who can sort of make those transitions, because it's not easy. It's really a very different way of operating, and watching you do that over the last couple of years has been awesome.
What is something, when you were first talking with Anand, I know you guys had experience, mutual experiences in the sales world, but what was that final moment for you where you were like, yes, this is a definite check that I am writing?
I was pretty sold on the idea in the first meeting, but then, for us, it's kind of like, okay, we have that kind of gut feeling, but then it's go verify it. I'd say it was as we were talking to the customers and really digging into the data and seeing that, yes, actually this validates kind of the excitement we had initially. And then I think maybe the kind of most seminal thing is this is back when you could meet in person, right before COVID. We had just a fabulous kind of dinner, cocktails at the Cuban restaurant on California Ave. And, we like to try and spend real time with folks. And a lot of it is, if you're going to be working with someone for a decade, you want to make sure you like them. And so that was kind of maybe the last sort of check the box. And it's just talking about, life, families, how we kind of approach the world. But I was pretty captivated from the first meeting, I would say.
Human connection, definitely important. And then I have one last question, Anand, for you, which is a little off of your pitch deck and your raise, which is you were at Accenture for a while. Yeah. What was that moment when you flipped and you were like, I need to start this company? I know we have a lot of founders who are listening, but we also have a lot of people who are in industry who might have that itch. What was that moment for you?
I think there's always a catalyst, and I had this moment where there was a promotion that was, I was going for a promotion, and it didn't quite happen. And I think it was almost kind of a very lucky moment in time where I was like, great, I'm going to go do something else. And it was just immediate flip to, I'm going to go do something else. And I had an amazing time, full-time with Accenture. I sort of then had a period of time where I was doing some consulting contracting work with them, and now they're a customer, and we have a great partnership. And so it's actually, once you're in a larger organization, I'd say there's a lot of inertia to go and do something else. And so anyone who's got an idea or is trying to think about building something, I always think about the words, if you want to go build a business, go get a job. Because if you're going to go fund yourself, go and do it on the weekends and the nights, go prove it out, build something, and then go and do it. Don't just jump into starting a new thing without a job, without any money. You're giving yourself a lot less runway to go be successful. And so I was very fortunate, having built up a period of expertise, and here we are now.
Too many bright minds are lost to management consulting. Brilliant people that work there, but it can be a little bit of a trap. And so I think, having the courage to sort of step away from, a pretty great gig to go solve this hairy problem, takes guts.
And quite the silver lining, a multi-million-dollar, billion-dollar silver lining in that situation. So I'm glad that also worked out. Definitely does take courage. Well, with that, we are going to close out today. Thank you both so much for taking the time to chat with us, and to our founders who came on stage and pitched. We are going to be coming back next week for TechCrunch Live. So if you're a founder who didn't get to pitch this time, that's okay. You're going to have a chance to pitch on stage next week. And with that, thank you so much, and we will see you then.
Thanks, Nisha. Thank you.